Welcome, friends. Today's webinar is on the new labor codes. As we all know that this new labor code is going to drastically change the definition of wages and is going to impact a lot of salary structures. It has already got the presidential assent and is now awaiting to be notified by the government. A few inputs are required from the state governments. That's what it is awaiting right now. But it's always important to understand the background, the context, and how it is going to impact us all, because we are in the finance professional. So it impacts us as an individual. It may also impact us as an organization. So it's important to understand this. And to explain all the context, to explain the new provisions, we have with us Anurag Jain. He's a seasoned professional, spent many years with Big Fours, Deloitte, KPMG, PwC. And now he's co-founder of ByTheBook Consultants LLP. He specializes in expatriate taxation, labor laws, and a lot of other regulations concerning individual taxation. So I welcome Anurag. I hope that it will be an enriching session for all of us. Over to you, Anurag.
Thanks, Anshul, for such a flowery introduction. So, a very good evening, friends. I hope from wherever you guys are joining, you guys are doing well and enjoying. In case in your area rains are happening, so you are also enjoying the rainy season, as we in NCR region are enjoying. Coming to today's topic, we're going to be touching upon labor codes, and as Anshul rightly highlighted, that it is this legislation is something that is of a concern area to every organization, to every employees. Even if we look at within organization as well, it's going to be impacting different stakeholders, be it legal team, be it payroll, be it HR or tax or finance. So we thought it would be a good idea to basically touch upon what these labor codes are all about, how it's going to be impacting the organization, what are the impact areas around it, and how as a consulting organization we have been helping the companies. One other aspect that I will also touch upon is there was one survey which was done by one of an esteemed HR organization. So I'll be touching upon the results which came out in this survey, which were quite an interesting results. So if we move over to the today's contents of today's session. So as I was telling, we'll touch upon what the labor codes are all about. We'll just provide a very brief overview. What are the key changes in each of the labor codes? We'll also be touching upon an important area of definition of the wages and how it's going to be impacting the organizations and its employees. Workforce categorization, what are the different streams of workers who are going to be there, or their classification. Again, how it would be impacting the different worker categories, what will be the sort of like the impact on the organization as well as their overall business impact is something that we're going to be discussing about. How can we support and how have we been supporting many companies around this particular legislation. Yeah, so if we talk about labor codes, just to give a brief background, see, we know that the labor legislations are quite extensive within India. And most of these legislations are emanating before the independence era. If we talk about why the government felt the need to basically come out with these labor codes, was that, again, there were many legislations. Some of these legislations were quite fragmented. Even the definitions within each of these legislations were quite different from a legislation to legislation. So just to give you that perspective, if we talk about the term basic wages, if you look at the definition in the Payment of the Gratuity Act, it has a different meaning. It has got a different interpretation vis-a-vis what is the definition of basic wages under ESI or the Provident Fund. or even Minimum Wages Act as well. So as a result of which, this different definition, there was a lot of issues around the interpretation. There were a lot of issues around the litigation aspect as well. So the government thought process, and this was again, this is not something that has arisen because of the recent discussions. All these discussions have been happening a decades back as well. There were some suggestions from the international labor organizations. Different labor committees were formed, which gave different recommendation. As a result of which, and all these discussions culminated into this framework of labor codes. This have been discussed with various participants, various stakeholders and forums, and now all the different legislation have basically been consolidated into the 4 labor codes. What are those labor codes? So first and foremost, there is Code on Wages. Now, Code on Wages subsumes 4 legislations relating to the wage rate, time of payment, and bonus. If we talk about the second labor codes, it's Code on Social Security, which basically focuses on different aspects around the social security, like Provident Fund, ESI or Gratuity. If we talk about Code on Industrial Relation, it consolidates around 3 enactments relating to industrial relations, including Industrial Disputes Act as well. If we talk about Code on occupancy safety, again, it basically focuses on and it basically amalgamates 13 labor laws relating to safety and health standards. Altogether, this basically consolidates more than 20 central labor code legislations. Yeah. Now let's have a quick look at how this entire timeline, the chronological sequence of events has worked about. If we look at the entire labor code journey, it all started with the Code on Wages. It got notified on 8th of August. And then there was this draft rules, which was notified by the central government. Then there was some suggestions from the Central Standing Committee. And then in 19 September 2020, all the other 3 labor codes were presented in Lok Sabha. And then on 29 September 2020, it received the presidential assent. Now, when we talk about the framework of this, all these legislations, all the 4 codes have received the presidential assent. So per se, they are legislation. The only thing which remains to be done from the central government side is to notify what will be the effective date of these legislations. Final rules, the draft rules have been circulated to different stakeholders. Their comments or the inputs have been taken. One other important aspect is around the role of states. Now, labor legislation, as we all might be knowing, is a concurrent legislation. It requires inputs and it requires governing authority from both the central and the state side as well. Now, what is the status of the draft rules around state? Now, you must have read it in different media that states are yet to come on board. They are yet to basically come out with their draft rules. So in this particular slide, we have captured what is the status of the draft rules. And if you look at almost all this, but there's a fine print attached to it. We'll cover that aspect in the subsequent slides as well. But if we look at a sort of like a very optical view from this particular slide, if we look at states like West Bengal have yet to come out with all the labor legislation or the draft rules around the labor codes. Meghalaya is yet to come out. Nagaland is yet to come out, right? If we look at the subsequent slides, there's a fine print that even those states which have come out with their draft rules have yet to come out with draft rules for all the 4 labor code legislation. So like in the case of Arunachal Pradesh, if we look at, they have come out with the draft rules on Code on Wages and the industrial relations, but they've yet to come out with the draft rules for occupational safety or the Code on Social Security. Similarly, if we look at Delhi, they have come out with Code on Wages draft rules, but for the remaining 3 labor codes, they are yet to come out with the draft rules. So this slide basically captures what is the statewide status. States like Uttar Pradesh. So if you look at majorly, all the BJP governing states have come out with their draft rules. But again, there are sort of like political considerations around it as well. So there are certain states which are still lagging behind. And what the central government is trying to do is basically get these states as well as on board. West Bengal, if you look at West Bengal, is yet to come out with any of the draft rules. Now, you must have read in different news media articles as well that there was this one thought process that maybe labor codes might come into effect from 1st April 2022. Then there was some dates around 1st July as well. We are in touch with the senior regulators as well. And what their thought process is, because it is a concurrent topic, all the states will first have to come on board. It cannot be the case that, let's suppose if West Bengal doesn't come on board and Uttar Pradesh is there, then the government rolls out the labor codes. Because what will happen is if a particular employee is migrating, let's suppose from West Bengal to Uttar Pradesh, then it's going to be having an impact, because in one state there might not be any labor legislation which is put into effect, and in another state the new labor code is already put into effect. So it might lead to a lot of fragmentation and all those confusion and chaos around it. So government intends to basically first put all the states on board. Now the second big question is, will all the legislations come into effect in one go, or will it be a sort of like piecemeal implementation? What we saw in the Companies Act as well was there was a piecemeal implementation to different provisions. And what my personal view is that in all likelihood, they might implement the labor codes on a piecemeal basis only. Already we saw that there were a couple of these sections which have already been put into effect. But by and large, the thought process, which I can understand from a discussion with different authorities as well, is that they might implement the entire labor codes in a piecemeal fashion. There's no concrete date as of now which has been notified by them. So whatever is coming in media is basically based on whatever inputs they can get from different government officials. Now, if you look at code on wages first of all, so I just thought it would be a good idea to do a quick comparison, because I read that many people were saying that labor codes is going to be a revolutionary sort of thing. It's going to be something that is going to change the entire landscape of labor codes. I would like to reserve that comment, because to my mind, it is more a case of evolutionary sort of like legislation, rather than being something which we can term as a landmark sort of thing. The reason for that is most of the legislation which is there in the existing law, that has been basically migrated to the labor code. But at the same time, there's a sort of like uniformity which has come about in terms of the definition, in terms of the certain aspects as well. So if we concentrate on the code on wages first, if we look at what is there under the present or what will soon be erstwhile regime, and what will be there under the code on wages. Right now, the minimum wages is applicable only to scheduled employment. So if we look at Minimum Wages Act, there is a particular schedule, and whatever employments or whatever sort of like type of employments are covered, that will be those cases wherein the minimum wages would be applicable. Whereas under the code on wages, all employees for whom the minimum rate of wages has been prescribed will be covered. Now, if we talk about the minimum wages limit, right now more than 1,000 minimum wages has been prescribed, which is dependent on the nature of the employment. So the government now intends to basically narrow it down and basically concentrate on certain aspect, like what is the skill of the employees, from which geography are they operating upon, what is the kind of work that they are doing. So the minimum wages now will be prescribed based on the skills of the employees. If they're operating from a metro or a non-metro city, what kind of a work are they doing? Let's suppose if a worker is working from a mine or in a high humidity environment, then the minimum wages which will be prescribed for them would be different as compared to a normal set of employee. The other key changes have been around the aspect on national floor wages. Now, national floor wages, again, they have picked certain cues from the global best practices as well. So there will be a national floor wage which will be prescribed by the central government. And based upon that, the state government will come out with the minimum wages. Now, how it will work is, let's suppose if the national floor wages for a particular skill of employees, let's suppose 1700 rupees per month. So the state cannot prescribe a minimum wage which is less than that. They can prescribe a minimum wage which is more than 1700 per month, but they cannot go below that. So that is how the concept of the national floor wage would operate. If we talk about the applicability of the provisions relating to payment of wages, so right now, again, this is a very important change. Payment of wages basically governs conditions around how the wages need to be paid to employees, what are the prescribed timelines, if an employee is resigning, by what time period the full and final settlement has to be done. So all this is now applicable under the present regime for employees whose wages doesn't exceed 24,000 per month. But now with the removal of this threshold limit, it will be applicable to all category of employees, be it blue collared or the white collared employees. So for organization, it becomes that much more important to see what are the various governing provisions for code on wages, which governs the payment of wages to the employees, and then see how they should align their policies and procedure around it. Similarly, if we look at wage threshold for eligibility of the stat bonus, right now it's 21,000 per month. Will they increase it or bring it in alignment with whatever threshold limits have been prescribed under the other legislation? Only time will tell. As of now, they are yet to prescribe the threshold limits for stat bonus. Similarly, for minimum bonus as well, 7,000 per month is the limit which was prescribed. Again, what will be that amount is something that will be notified by the government. As I was telling earlier, definition of wages, there were various definitions under different legislation. Now there will be uniform definition. Definition of wages is something that I'm going to be covering extensively. I've also come out with certain simulations, some number crunching as well, just to showcase what will be the impact of the wages on the compensation. Now, employer, again, there was a narrower definition which intended to cover basically direct employment. Now, contractor will also form part of the employer, as a result of which the contractor will also have certain onus cast upon them to basically comply with the payment of wages legislation. The next slide, please. Yeah, code on social security. So this is one legislation or the one code which is very much interesting from the perspective of the employees, because it governs aspects around gratuity, provident fund, maternity benefits, and so on and so forth. If we talk about the coverage for social security, right now it is focused mainly on the organized sector, but the code on social security also intends to cover the new age category of employees. If we talk about the new age category of employees, these are your gig workers, platform workers, home-based workers, as well as the larger category of the unorganized workers. So for them, a separate or a dedicated social security scheme will be provided, wherein what will be the contribution from the government side, what will be the contribution from the aggregators, or what will be the contribution from the employer side. That is something that specific social security scheme will intend to cover. If we talk about the applicability of the provisions to Provident Fund, wherever under the present regime, the employees used to cross that threshold limit, whatever was prescribed, then employees were not required to contribute towards PF, pension, and EDLI schemes. Under the code on social security, what they're saying is if your wage ceiling exceeds a particular threshold limit, then pension and EDLI is something which will not be applicable for you. For PF, you can still continue that voluntary payment. If we talk about ESI applicability, again, 21,000 is the limit. Whether it will be increased or decreased, again, it remains to be notified by the central government. One question that I've been getting frequently is what will happen to the present threshold limit of the 15,000 for the Provident Fund. Right now, it remains as is. And one interesting aspect is, if we look at Provident Fund, the Provident Fund normally has three schemes. There's a Provident Fund scheme, there's a pension scheme, and then there's a EDLI scheme. Right now, for code on social security, all these three schemes will continue to remain for a period of 12 months from the date of the commencement of the code. The government has not yet come out with any different pension schemes or provident or the EDLI scheme for the employees. The present scheme will continue to operate for a period of 12 months from the date of the commencement of code. Gratuity, if you look at gratuity, not much change for the normal set of employees. The competition methodology remains the same. The limit of 20 lakhs continues to remain the same. One important change is for employees who are operating on a fixed term basis. I'll give you an example. Let's suppose there is an expat employee who has come into India and they came for a defined period. Let's suppose 3 years, 4 years. Then they will be termed as a fixed term employees. Right now, for such expat employees, the gratuity provisions were not applicable because they were not fulfilling the criteria of fulfilling that de minimis period of 5 years. So in their case, the gratuity wasn't applicable. But what Code on Social Security has suggested is that for these category of fixed term employees, the gratuity would be applicable and the gratuity would be paid to them on a proportionate basis. For fixed term employment, they have categorically mentioned that employees who are covered or basically employed for a period of 1 year or less, for them, the gratuity provisions or the gratuity benefits would not be applicable. Wage definition is again something that we will be covering in a separate dedicated section. Yeah, next slide. Again, as I was telling, fixed term employment, industrial relations code, they have come out with a definition. It is which says that all the fixed term worker will be eligible to statutory benefits available to a permanent worker irrespective of the meeting qualifying period. And as I was saying, that de minimis period of 1 year has been prescribed for fixed term employees. So in case an organization is employing any fixed term category of employees who is for a period of 1 year or less, for them, the position will remain more or less status quo. But if the fixed term employee is employed for a period of more than a year, then for them, the social security benefits, primarily gratuity benefits, would become applicable. Another very, very progressive change is the creation of a reskilling fund. Right now, there's no such concept under the existing legislation. Now, in case of a retrenchment, there will be a contribution by the employer. They will have to make a contribution to the government reskilling fund within 10 days of the retrenchment. And the amount will be basically 15 days wages, which is last drawn by the retrenched worker. And once this contribution is made to the government's coffers, then the fund shall be credited by government to worker within 45 days of the retrenchment. So the government is not basically asking the employer to make a direct contribution to the employee. Rather, this amount will go first to the government, and then government will be crediting it into the account of the respective retrenched employee. If we talk about the application for registration and alteration of the name of trade union, more or less things remains the same. The only change being now application can be made via electronic means as well. Moving on to the last, occupational safety, health and working conditions code. One important change here is on the appointment letter. So for the appointment letter, no such concept were there under the existing statute. There was no sort of like format or the parameters which were prescribed for appointment letter. But now the new code says the appointment letter has to be issued by every organization. And those appointment letter have to have certain mandatory fields. Mandatory fields are something like Aadhaar number, labor identification number, universal account number. So all these parameters have been covered in the draft rules as well. The organizations, when they are issuing the appointment letter to the new as well as existing employee, they have to basically issue them in this and basically covering all these different criteria. Now, one question that I always get is what will happen to the existing employees? Will they be required to be issued a new appointment letter in this format? The answer is yes. But for them, they have the government has given a timeline of 3 months. So within 3 months of the commencement of the code, the appointment letter has to be issued to the existing employees as well. Extra wages for overtime, again, nothing new in this regard. Right now as well, the overtime has to be paid at twice the rate of the wages. The only changes, they have basically tweaked the time period. Right now, if the worker works for more than 9 hours in a day or more than 48 hours week, they are entitled to overtime wages. Now this limit is 8 hours in a day or more than 48 hours in a week. So they have tried to basically rationalize this aspect as well. Similarly, for entitlement for annual leave with wages, earlier person or the employee were entitled to annual leave with wages if they work for a period of 240 days or more. They have relaxed this to 180 days or more by establishment during a particular calendar year. On the leave encashment, another interesting change is wherein they would say that if an and this is basically to promote the work-life balance. What the new legislation says that the maximum leave which can be carried forward is 30 days, but whatever leaves can't be carried forward, the workers are entitled to basically encash those leaves and basically make a request to their employee to encash those leaves. So leave encashment, accrual, and those provisions is another important aspect that employer organization will have to take care of. Now, this is one section wherein we're going to spend some time because as you must have read in different news articles and about the definition of wages, how it will be impacting the organization, how it will be impacting the employees. I would like to just clarify one key sort of like notion that these articles are saying, that if you keep your wages as 50% or your basic as 50%, then you are basically covered. You don't have to do any other thing. You will see in this slide as well as the subsequent slide that that notion is totally incorrect. What the new definition of wages have done is, though they have tried to ring fence certain things, but they have tried to basically elaborate by saying that all remuneration which is payable by an organization by way of salary, allowances, or otherwise, that will first and foremost in the first instance form part of wages. And this would include your components like basic pay, DNS allowance, and retaining allowance as well. If you look at this first bucket, it mentions what are the components which will form part of wages. Basically, it means each and every component which is payable by an organization to their employee will form part. Basic pay, DNS, and retaining allowance will be forming part of those inclusions. Now, in the second bucket, they have come out with the exclusion criteria. What that particular exclusions are items like stat bonus, value of housing accommodations, employees' contribution to Provident Fund. So all these list of items which are covered in the second bucket, they will qualify for the exclusion. But if we jump to the third bucket, and this is where things get interesting, because the minute an organization sees this list of exclusion, they will try to basically structure the composition in a way which is more conducive to their requirements. But what the law has now done is that try to do a bit of ring fencing around it by saying that, okay, fine, you give those exclusions as a part of their components, but at the same time, these exclusions cannot exceed 50% of the total remuneration. How this will entirely work, I will showcase by way of a example in the subsequent slide. But one important aspect that I would like to touch upon is regarding this fourth bucket, which talks about the value of the remuneration in kind. Now, this is where things get interesting, wherein the law says that where an employee is given remuneration in kind, then the value of such remuneration as does not exceed 15% of the total wages shall form part of wages. When we talk about remuneration in kind, these are those benefits which are provided by a company to the employee in the form of non-monetary benefits. So the main thing that comes to my mind is something like ESOPs. So wherever a company provides ESOP, these are not monetary, but rather sort of like non-monetary benefits, which is being provided to an employee in the form of other than cash components. So in this case, even those components will form part of wages up to a certain extent. But an interesting aspect is how the valuation of these perquisites will be done. Because if you look at income tax legislation, there's a rule 3 which basically comes out with the valuation rules of these perquisites. But under the code on wages, under the code on social security, they have nowhere covered what will be the valuation criteria, what will be the valuation rules around these non-monetary perks. So it will be interesting to see what government, whether government will come out with any suitable clarifications around this issue. So this is a very simple illustration that we have covered in this slide. So if you look at how the definition of wages will work about, in a typical organization, these are the components which are paid by an organization. These are components like basic, HRA, DA, medical commission, conveyance. So it all adds up to 40,000. Now, if you look at all these components, there's HRA, there's commission and conveyance, which falls under the exclusion criteria. So an organization might say, okay, fine, let me give this components, and these will be covered under the exclusion criteria. Now, if you look at the total of all these specified exclusions, it is totaling to 22,000, which is more than 50% of 40,000. So what will happen is, and how this definition of wages will work is basically this extra 2,000 will get added back to the definition of wages. And for me, the wages for the purpose of paying retirement benefits and all those other things will be construed as 20,000 instead of 38,000, right? So this is one key area, because what I was reading in some of the articles was that if you keep your basic as 50% of your CTC, then you're basically covered under the definition of wages. What I'm trying to say here is, let's suppose if I keep my basic as 20,000, but then there might be some special allowance component as well. So if I add it up, because there's no per se specific exclusion for special allowance, then my wages as a percentage of CTC would be on a higher side, right? So if an organization keep the basic as 50%, special allowance is normally 15 to 20% of the CTC, then my wages could be as high as 70 to 80% of the CTC, on which the organization will have to pay those retirement benefits. So this is a interesting sort of like interpretation about this particular definition. Okay. So on this slide, what I have done is captured what will be the impact on the gratuity. See, as far as regarding Provident Fund is concerned, there are certain strategies by which one can mitigate the cost around it. But gratuity is something which is a big ticket item which is gonna hit the balance sheet of the organization. How it will hit them is basically, if we see this example, the total wages to be considered for gratuity under the existing legislation is coming to 8 lakhs. How it is coming to 8 lakhs is because under the present regime of gratuity, my basic pay is 8 lakhs. So I would say, okay, fine, my 8 lakhs is wages for the purpose of payment of gratuity act. And it is on this 8 lakhs that my computation will work around. But if you apply the new definition wages in this structure, my wages will come to around 14,34,809. So it is on this particular component my gratuity benefits will calculate it. So if a person has rendered let's suppose a service period of 10 years, then while under the present regime, my gratuity would come around to 3,84,000. But under the Social Security Code, it will come to 6,89,000, which is around 40 to 45% of increment in terms of, or I would rather say twice the amount which is coming around. So this is the key impact which is coming around for cases like gratuity, and for which organizations are now scrambling to see whether it is in all likelihood increasing the impact on their payout as well. Because as we all know, what organization typically does is either they create a provision in their books for the gratuity amount, or they create a approved gratuity trust, and then contributions are made via such trust to LIC or the other authorized service providers. So for them, the provision amount will take a hit, or if they are making the annual contribution, that will also take a hit. The reason for that is because there is no grandfathering clause which has been built in this entire legislation at present. So let's suppose a person has rendered a service period of 15 years. That person retires or resigns. Once the new code commences, then my wages, whatever is my last drawn pay, will be calculated as per the new definition. And let's suppose if that person wages now comes to around 14,34,000, so organization will have to pay the gratuity on this base instead of the earlier base of 8 lakhs. And this is where the cash impact will come for the organization. Now, a few interesting aspects that I just wanted to touch upon the labor code survey. So there was this one retirement benefit survey which was conducted, I just wanted to showcase from the company side what companies are thinking around. So if we look at the results of this survey, one of the question asked was, has your organization taken any action to assess the impact of the labor codes? Almost 70% of the participants said yes. In my personal experience, wherever I'm having those conversations with the companies, many companies are of the thought process that let's wait and watch. Let's see, once the code comes around, once it is put into effect, then only we will start basically working on it. My suggestion would be to basically see this from a different side, because once the legislation would come into picture, it might so happen that the government will not give that much amount of time to the organization to put it into effect, because all this legislation are there in the public domain since 2020. It is almost 2 years since these codes received a presidential assent. And the thought process in the government is that ample amount of time has already been given to the organization to align their policies and procedures. So it might so happen they might not give that much amount of time, but again, it remains to be seen how lenient the government is going to be around the implementation of these codes. But as far as the thought process is concerned, many progressive organizations are taking the call that at least let's prepare ourselves, let's assess what is the impact areas of this code, so that at least 70 to 80% of the homework is done. And once the code comes into picture and whatever clarifications or circulars comes around, then they just need to tweak their policy and procedure with those clarifications. If you look at stock options, car leases, variable, all these components, many organizations have the thought process that all these components should be excluded from the definition of the wages. They are taking a practical call around this. Of course, none of the organization per se have implemented their compensation structure in alignment with the labor code. The reason for that is basically there's a lot of ambiguity around components like stock options, on components like variable pay. Because if you look at the exclusion criteria, they have used the word stack bonus instead of the variable pay. So there's one school of thought which says that because there is no exclusion for the variable bonus, as a result of which the interpretation that comes is that the variable pay will also form part of the wages, which is leading to a lot of absurdities, because when a year starts, variable per se is a variable component. It all depends upon the performance of the company, the performance of the employees. So as a result of which, what will happen is at the start of the year, if the variable bonus has not yet been announced, how will the organization be required to contribute retirement benefits towards such a component? That is one of the foremost questions that many companies are asking. So that's why I think many organizations might have taken a practical call right now that to include all these different components from the definition of wages. My sense would be to just wait and see, because in all likelihood, government will come out with a suitable clarification around these components, suitable clarification around how the valuations will be done for any non-monetary perks. If we talk about the compensation structure, as I was telling, many companies are thinking of changing the compensation structure. Some companies are thinking, let us increase the basic pay. There's almost 31% of the participants which said that we will increase the basic pay, as a result of which we feel the structure would be aligned. Many companies are thinking no need to change the compensation structure. Almost 21% of the participants said yes. Some companies are also thinking of increasing their house rent allowance beyond 50%. Almost 17% are thinking around it. But if you look at majority organization, almost 34% of the organization are not sure at all how to basically structure their compensation components for their employees right now. Another interesting aspect, as I was telling earlier, was around Provident Fund, because Provident Fund, if an employee is earning 15,000 or less than 15,000, they're mandatorily required to contribute. If they're earning more than 50,000, they're already contributing on a voluntary basis. So almost 46% of the organizations are thinking of continuing the trend of contributing PF on basic salary as per the prevailing legislation. Because if you look at the Provident Fund scheme as well, for employees who are already contributing on a voluntary scheme, they cannot stop the Provident Fund contribution, but they have to continue it. But they can contribute or continue their contribution at the present basic salary. So that is something that is allowable under the PF legislation as well. 13% of the organizations are thinking that let's apply the new definition of wage and contribute it on this basis. It might lead to increase in the cost of the employees or the organization. It might lead to decrease in the take-home pay of the employees as well. Some organizations are taking a much harsher approach of restricting the contribution to INR 15,000 per month, although they are in a sort of like lower category. 32% of the organization thinking not sure about it. They want to again wait and watch and see what is the clarification that the government brings.
Anurag, can I ask a question here?
Yeah.
So, as we are now seeing that the definition of wages will undergo a change, and it would include for contribution to PF purposes also, to my mind, which I can understand right now, is that apart from basic pay, some other components will also be included to compute this contributions, right? So 12% contribution. However, in the Income Tax Act, it says that only 12% of the basic pay is going to be exempt.
Yeah.
And so, for example, if there are other components which, as per the wage code, form part of the basic wages, on which I have to contribute 12%, but that if definition of exemption is not changed in the Income Tax Act, would you see that there will be an impact on the taxability of that particular contribution also?
See, this is a very interesting question, and I think this question also came when there was a Supreme Court ruling on Vivekanand Vidya Mandir. So just for the context of the larger audience, Vivekanand Vidya Mandir Supreme Court ruling came where they gave the interpretation of what shall be termed as wages. They included various components and said, okay, PF contribution needs to be made on such components. So companies were basically contemplating that if Provident Fund regime says that, okay, on these four components, I need to pay Provident Fund contribution, but then there is a tax legislation which says that Provident Fund has to be contributed on two components, and it is only on these two components that the exemption would be available. Then for this differential portion, will there be taxes which the companies would need to withhold, basically offering that employer contribution to taxes and then do the withholding on it? The answer for that was there was one ruling, I'm not able to recall the name of that ruling, wherein they have given interpretation of what will be the term as basic salary. Because if we look at the tax legislation, they're not using the term basic wages, rather they are terming it as basic salary. So what they're saying is basic salary would encompass most of the monetary components that companies are paying to their employees. So as a result of which, if we look at that interpretation, then I will be more or less in alignment with my PF legislation, because PF legislation uses the word wages, whereas the tax legislation is basically using the word basic salary.
Agreed, but you understand that the tax officers would definitely like to challenge these kind of positions.
Yeah, in fact, this was one point which was mooted. I think there was a NASSCOM conference in 2020 in which this point was also mooted. And I remember one of the government officers were saying that, okay, they are going to be looking at it. They were not aware about this particular point. And they noted it and they said, okay, fine. Whenever they would be issuing the FAQs on the definition of the wages, they might basically address this particular aspect as well.
Great.
Anurag sir, Dipanshu this side. May I ask a question?
Yeah. Hi, Dipanshu.
Hi, sir. First of all, very nice presentation, sir. And I have been also part of Deloitte for 5 years. I have worked with Anshul, sir, and I know that you have been part of Deloitte as well. So it is nice to be a part of this. So, sir, my question is related to what Anshul sir have just asked. My question is, for example, if an employer is giving, taking up the burden of tax on the salary of the employee, giving a tax on that is a perquisite is a given, that I take care of your taxes. Would this impact the definition of wages? Would it be covered in the basic salary or not?
See, if any taxes is being borne by the employer, if we look at the tax legislation as well, there was a special bench ruling which said that any taxes which is borne by the employer will come under the definition of non-monetary perquisites, right?
Yes.
So if we use that definition and then apply it within the definition of wages, the definition of wages also says that whatever non-monetary perquisites is being provided by an organization, up to the extent of 15% of those total amount will be clubbed into the definition of wages. So that is one important aspect that we need to consider. And that's why I was saying that wherever non-monetary perquisites is being provided, first and foremost, the valuation criteria is important. But if we look at components like tax bond per employer, there will not be any separate evaluation criteria which will be prescribed by the government. We'll have to rely on those numbers, and then basically when we are calculating the definition of wages, we'll have to see how those numbers will basically sum up and what will be my wage numbers, which will come by including those components up to a certain extent. Another important aspect that I would like to touch upon for the larger audience is that for normal employees, normally the 15,000 limit is applicable. For foreign national, typically expat employees who are foreign passport holders, for them, the 15,000 limit is not applicable. So it is this particular category of the population which might again get impacted because of this change. Now, most of the expats who are coming into India are tax equalized as well as social security equalized as well. As the result of which, ultimately, we feel that it will be the impact on the organization per se on account of these changes on this definition of wages.
Okay.
Hi, Anurag. My name is Amit. I have a question relating to bonus payment. Suppose an employer pays some bonus amount which was not committed or agreed, and based on the performance, will that be considered as the part of wages?
Yeah, hi, Amit. As I was telling earlier, see, right now under the exclusion criteria, they have mentioned the term stat bonus. If we talk about statutory bonus, these are bonus which is paid under the Payment of Bonus Act. Now, by and large, if we look at a typical white-collar employee, they are not covered under the Payment of Bonus Act. For them, normally the company pays variable bonus, which is again dependent on the performance of the organization or performance of the employee. It is variable. At the start of the year itself, the organization have no visibility what will be the variable bonus that they will be paying to their employees. It again firms up depending upon their own performance cycle as well. So it will be difficult for the organization to anticipate what is the contribution that they're going to be making on account of these retirement benefits. This is from the practical aspect. But if we look at the definition of the wages per se, right now they haven't given any specific exclusion to variable bonus. As a result of which, one school of thought is that because there is no specific exclusion, variable bonus, even leave encashment, there is no specific exclusion for leave encashment. All these components will form part of wages. Now, this is a sort of like literal interpretation which is coming from this definition. But then there are practical challenges to it. Of course, at different forums and different conferences, all these points have been highlighted by the Big Four fraternity, by the lawyer and all those big law firm community as well, that this will definitely pose a big challenge for the organizations to do the compliance. And what they are suggesting is to exclude this component altogether from the definition of wages. Even your one-time payments, if we talk about referral bonus, if we talk about notice pay, or any other sort of like one-off payments which is being paid by the organization, it makes no sense to include these components right now for the definition of wages, because first and foremost, it will increase the cost for the employer. It might obviously hit the take-home pay of the employees, but at the same time, it would be practically impossible for companies to administer. Yeah.
So Anurag, so sorry to pitch in again, just summarizing what we discussed. So this tax on non-monetary purposes, this would be part of basic salary as per the ruling which you are not able to recollect, right? Because most of what is being paid was considered to be part of basic salary as per that ruling. The name. Yeah. Okay.
Yeah.
Thank you.
Now we look at this particular slide. As I was telling earlier, gratuity is one big ticket item, which is sure gonna take a hit for the organization. Now, how the organizations are taking cue from this is, many organizations, almost 40% are saying that it will have a financial impact on their P&L. And all these 40% organizations are thinking of updating their gratuity policy. 28% organization feel that there will not be any financial impact on PL, or 28% on not going to be updating the gratuity policy. 24% feels that yes, financial impact will be there, but they're not going to be updating their gratuity policy around it. Only 8% feel that there's no impact, but still they would be carrying out changes in the gratuity policy. Now, just a quick look at the workforce categorization. So as I was telling earlier, one of the main reasons for the labor codes to come into picture is also on account of different categories of employees which have come about in recent years. So earlier we would have never heard category of employees like gig workers or platform workers, but now with the proliferation of the startup economy, with the companies like Uber, with Zomato and Swiggy, all this coming around, they tend to hire people who are per se not falling under the traditional employer-employee relationship. As a result of which, there is a host of litigation which these companies are facing from the PAF department, the Esi department. And the thought process of the government was that these people should not be marginalized because of the existing legislation. And so what they are thinking is to draft or to formulate a separate social security scheme for these category of employees. These are like gig workers and platform workers. One of the main argument, or one can say, is what is the distinction between a gig worker or platform worker is a platform worker is a person who is working outside the traditional employer-employee relationship, but who is providing his services via a platform. So if we see the cab drivers working for the Uber, they would typically be falling in this platform worker category. If we talk about gig worker are basically people who again are not forming or coming under the employee aspect, but rather performing activities on an independent. So a freelancer would typically qualify as a gig worker. Fixed term employment is again something that I have mentioned. For fixed term employees, the government has come out with a gratuity provision, and they would be entitled to gratuity benefits on a pro rata basis. Unorganized workers are people who are home-based workers, self-employed workers, a wage worker in the unorganized sector. These are typically people for whom a particular threshold limit might be prescribed, for whom a different set of benefits will be provided by the companies, by the government, as well as there would be contributions which these workers can also make to such a scheme. The purpose is to basically make social security more universalized concept. In fact, there was one interesting question that was asked to me, was that with social security and all these aspects now attaining universalization, are we one step closer to entering into a sort of like social security agreements with US or UK? Because if you look in the past, these two countries have not yet entered into social security agreement with India, based on this argument that India doesn't have a universal social security concept. So with this codes coming into picture, will the government think of again reigniting those discussions, is something that we'll have to see in the coming time. Next slide. So key pointers, I think we have covered all those aspects. Again, gratuity benefit applicable to fixed term employees. There will be a separate social security scheme. There will be a registration requirement, and all those facilities have already been started by the government. There's a separate dedicated portal wherein all these workers can go, log in, and basically register their and basically do a sort of like KYC for their identification. And once the scheme comes into picture, they will be then entitled to the different benefits provided under the social security scheme. As I was telling earlier, the funding of such schemes will be done by a central government, state government, aggregators, or there might be other sources like the employee themselves, or the performer of their work might themselves be able to make such contributions to basically build a good and healthy retirement corpus. Now, this particular slide is more so relevant from the organization's perspective. These are basically the impact areas from the organization. As far as regarding labor codes is concerned, there's a need for a salary structure alignment, workforce categorization becomes important, working hours, leave policy, all this is something that will need to be aligned with the labor codes. The organizations are also assessing what will be the P&L impact on account of gratuity, PF overtime, and all those different benefits. HR policies will also need to be realigned. Letter of appointment, as I was mentioning earlier, would need to be again drafted in accordance with whatever is being prescribed under the rules. Plus, at the same time, though the compliance will be easier, but the penalties will be stringent. The government has also come out with the concept of a facilitator or inspector come facilitator. So wherever those inspectors are there, they would be inspecting your premises. Earlier, they used to inspect it and they used to issue the notices. Now they're also will be acting in a consultative capacity, wherein if you feel there is any doubt or any issues around the interpretation of the law, you can feel free to approach them. They will provide you guidance as to how the compliance needs to be done. If you feel for certain reasons you are not able to fulfill certain compliances, then in such a case, you can ask them for the relaxation for those compliances. So again, this is all theoretical. Practically how it will work around is something that we'll have to wait and watch and see. Review of the payroll policies and processes is something that the organizations will again have to see. There's a very stringent timeline. You must have read in the article that there's a stringent timeline of 2 days, that once an employee resigns, then the organization will have to basically make the payment of wages within the period of 2 days. Again, it's very, very stringent. It is something that is practically impossible for companies to implement. Companies and at various forums have already asked the government to reconsider these timelines. Government has the power to basically amend these 2-day timelines as well. We'll have to see how this pans out. Contractor related compliance is another important piece. Wherever companies are engaging contractor, they will have to ensure that the contractors are fulfilling those obligations, submitting all those relevant documents so that they can also have an audit trail with them as far as regarding these compliances are concerned. Now, how our firm has been supporting the organizations is basically what we are doing is we are helping companies in doing that impact study on labor codes, and we are dividing it into 2 phases. The phase 1 is basically focusing on the impact assessment, wherein we look at the compensation structure of the companies, tell them that these are the impact areas for you. We also help them in basically working out certain simulations on the compensation structure as well. Phase 2 is wherein we review their policies and procedures, tell them that what are the alignments that needs to be done in these policies and procedures, provide our recommendation. And the phase 3 is wherein we do the labor law compliance entire management framework. We help them, whatever system related changes they need to do, we help them in carrying out those changes. And if they want to basically draft out a checklist for all these compliances, because we have to keep in mind, this is not only applicable at a central level. So if an organization have a presence in Maharashtra, Tamil Nadu, or other states, they'll have to see what those state rules are there and accordingly map their compliances to that respective states as well. So again, it's a sort of like complicated exercise. It also depends upon the structure of the organization. From if they are operating from different states, then again there will be complexities around it as well. So that is all from my side. These annexures basically mention what are the basically legislations which will be subsumed.
I think there are few queries. Yes. Mitu Khosla had raised her hand. Mitu, if you can just ask your question.
I'm already seeing one question. I think Rupali has asked, can a person who is contributing voluntarily can still pay PF on his basic wage, or he has to compulsory pay as per the new definition? The answer is yes. There is a choice available to such an employee. They can either go in for the pay as per the new definition, or they can still continue their PF on the basic wage. That flexibility has been accorded in the PF legislation.
Mitu, can you ask your question? Yeah.
Yes, sir. So basically, I had a question about gig workers. So the independent advisors or contractors or people who are hired on contracts, will they be covered under gig workers?
Yeah, that's right. I mean, the thought
like
process
supposing
is
legal advisors or anybody who's serving as a consultant to the company but is not an employee. So that person is also, because we all know that for the consultants, we do not have any social securities as such currently.
Correct.
So yeah,
Correct.
so they will also form part of the gig workers, right?
Absolutely. That is the thought process. That is the thought process, because the government's intention is to cover each and every category of worker, and that's why they are emphasizing on the words like worker, employee. Plus, at the same time, they have come about with definition for each of these different categories. So, as you would have seen, that they've come out with a specific definition for a gig worker. They've come out with a separate definition for platform worker as well. So their intention is to cover each and different category of worker. And as you rightly highlighted, people who are working under as a consultant or under the retainership arrangement, right now there is no social security legislation.
Yes.
Normally people then contribute towards a public provident fund scheme, or they might want to contribute towards national pension scheme, but that does not enable them to build a very good retiral corpus. Again, it is all dependent on person to person. But if there is a mandatory scheme allows a person to build a good corpus. So I think the thought process for from the government side is to inculcate that habit of saving, inculcate that habit of investing into those retiral corpus among these category of workers as well.
Just
Thank
one
you so
question
much,
here.
sir.
This is very interesting. Say, for example, if a chartered accountant is running his own practice in a proprietorship firm, right? And if he's having a retainership from a client, would he be considered as a gig worker or not?
Now, this is one interesting question, because what will happen is typically that arrangement by the organization is with that consulting firm. It is not with that particular individual.
No, but if it is a proprietorship firm, then what?
If it is a proprietorship firm, then we'll have to see, because that particular scheme right now focuses on that individual, right? So if it is an individual, my personal thought would be, then in such a case, that social security scheme might be applicable on such a person, because he or she might qualify as a gig worker, in which case there might be some contribution requirement both from the service recipient side as well as the service provider side as well. But if that engagement is with a consulting firm like a LLP structure or partnership firm, then we'll have to see whether any requirement would be applicable of them or not.
Say for example, there can be multiple. Let's take an example of income tax retainership or a GST retainership, compliance retainership, right? Of monthly retainership of 10,000 rupees from multiple clients. Say for example, if he has got 5 or 6 multiple clients who are giving him a monthly retainership, so would he be considered as an employee or a gig worker for all those 5 organizations? Because this is going to be then a huge compliance burden.
See, straight away employee he will not be considered, because whenever a person is working under a retainership or a consultant agreement, that person doesn't qualify to be an employee. So he's straight away out of that employee basket. The question that remains to be seen is whether wherever these set of people are basically engaged, whether there will be a requirement first and foremost under the gig worker category or not. We also have to see and understand, whether there will be any threshold limits that they might prescribe.
Yeah, I think that would be important.
What will be important is the government's intention is always to first and foremost protect the interest of people who are earning wages, commission, or any other remuneration under a particular bracket. So as you would have seen, even in PF as well, for people who are typically a white collar employed earning more than 50,000, for them it's a voluntary. Per se, there is no requirement for them to contribute towards PF, but they do it on a voluntary basis because first, it helps them in building a good retiral corpus. Second, there are tax benefits associated with it as well, right? So similarly, for a person who is working under retainership, government may come out with any threshold limit wherein they would try to protect the interest of people who are at a lower income bracket rather than those people who are earning well.
Right, because so if it is not that, if it's not that case, because then predominantly the lawyers, because law firms are all hiring the lawyers under the retainership format. Similarly, the doctors, the hospitals are hiring them under the retainership agreement, and many times chartered accountants as well. So this is going to be an interesting thing. Good.
Yeah.
Any other question? Any other question? If you have any in the chat box.
Hi, Anurag, can I ask one question?
Yeah, who is this?
This is Sharad.
Yeah, hi Sharad, how are you?
Yeah, good. Anurag, thanks for your presentation. So my question is with respect to the applicability of these codes. So the trigger point is the location of the employer or the location of the employee. So take 2 cases. The company is registered and headquartered in Gurgaon. It has branches in Pune and Bangalore. So employees are based out of 3 locations, Gurgaon, Pune and Bangalore.
Yeah.
So which state law will apply? Second case would be a company registered in Gurgaon. It has employees working from home at Gurgaon, Pune and Bangalore. So in both the cases, how the code will trigger?
What will happen is, first and foremost, the code will get triggered first and foremost on the number of the employees. So if we look at PF, we have a prescribed limit of 20 or more than 20 employees. For gratuity, 10 or more than 10 employees. So all those prescribed criteria continue to remain the same. That is one point. The second is, whatever is happening right now under the present legislation, they will continue to operate. So if we talk about, I'll give you a very interesting example. Like for professional tax is again applicable for people who are rendering services. So a question that came around was, a company who is registered in Maharashtra as under the Shops and Establishment Act, but employees are working for that company. Earlier they were working in Maharashtra, but because of the COVID and the pandemic situation, now they are working from their hometown. Whether for them the professional tax is a requirement applicable on them or not, though no formal clarification has yet come from the professional tax department and all those things, but the thought process which we consulted with different lawyers was, per se, because the organization is first and foremost established and registered with the Maharashtra Shops and Establishment Act, and the employees were earlier also working, plus at the same time they are rendering services to that particular establishment, so professional tax per se would be applicable in such a case. So a similar analogy can be drawn for the other legislations as well. Again, whatever is happening under the present scenario, if we talk about the place of service or the organization where it is registered, all those aspects will continue to remain the same. What the law says is, the state rules will be applicable wherein you are carrying your business. So if you have a business which is being carried from different states, all those respective states rules will be applicable. It is only for certain establishments like a railway establishment or mines for which a central rule would be applicable. Otherwise, for by and large, for all the organization from wherever they are operating, if they are operating from 3 states, all those 3 states relevant draft rules would be applicable on them.
And Anurag, in the second example where the employees are working from home.
So where the employees are working from home, which entity are they working for? So let's suppose if they're working for an entity which is registered with the Maharashtra Shops and Establishment Act. The reason I'm quoting Maharashtra and all these are because they have a professional tax requirement. Again, Chennai also has a shops and establishment, professional tax requirement. I think there are other states as well. West Bengal also has a professional tax requirement. So there we were facing a lot of queries from the client where their employees were working from a remote location. So the question that was asked to us was, because in West Bengal they haven't yet registered, is there any West Bengal related legislation which is applicable to them? The answer, the practical answer which is coming right now is no. For them, for these remote working employees per se, the employer in which state the employer has registered, those legislation will be applicable.
Got it. Thanks, Anurag.
I'm seeing one question from Mr. Yogesh. He's saying, is there anything finalized in these labor codes about the calculation of leave encashment for employees? Because some employees took 1/26, 130 at the time of calculation for eligibility of. Yeah, I think there's some answers around the draft rules around it. I'll come back to you. What I'll do is I'll answer to this query to Anshul, and then you can basically get the clarification on this. I think there is some portion around this 20, I think it is 26 days, but I'll confirm to you on this aspect.
Sure. I think there is one more question. There was one more question from CA John Ravindran.
Yeah.
Does these...
Can I ask that question?
Okay. Yeah, please go ahead.
Go ahead? Yeah. Thank you. Thank you, Anshul. Thank you, Mr. Anurag, for an excellent presentation. My question is that whether these new codes will be applicable to the charitable organizations. There are a number of organizations, charitable organizations are now not exempt from EPF, PF Act, ESI Act, Payment of Gratuity Act. They are not exempt. But there is various other laws. I talk about charitable institutions, I talk about all institutions, including the schools, the hospitals. Will these new codes be applicable to them?
I think government's intention is to basically cover every bit of the establishment, unless until we talk about units which are governed by the central or the state government, like your military organization or your police organization. But if we talk about specifically organization like charitable hospitals, their intention is to cover these organizations as well. I remember there was this one past circulars around PF as well, which said that wherever there are charitable institutes which are registered with the government and they are promoting they are being formed to for religious or those purposes, for them the PF is not applicable. But I think there was a lot of litigation around those aspects, and then later on, I think the position was taken that all these organizations will have to start contributing towards PF as well. So I think the government's thought process is per se very much clear. They want to cover this organization because, again, these organizations also employ a lot of headcount of employees, be it blue collar, white collar, or marginalized sections of society as well. So for them, the social security contributions become that much more relevant. And that is why this labor codes come into picture, wherein they want to advocate the concept of universalization and say that every bit of organization or every bit of the employees would be covered under the labor codes. They would be required or they would be entitled to those social security benefits.
Yeah, you're right. In fact, in 2015, another circular was issued by the central government, wherein they categorically said all charitable organizations, whether it is school. In fact, schools and hospitals are already covered under PFI. They said all these main organizations, charitable organizations, religious bodies are covered under PFI. So I made a lot of my clients to get into PFI. So if these new labor codes will be applicable to them, I think I should start preparing and educating them. That's why I'm asking you. Thank you. Anyway, thanks for the clarity. I understand what you're saying. Thank you.
Yeah, thanks. One question from Manish saying whether special allowance, all types of variable pay like bonus will form part of wages. The answer right now is yes, but I'm caveating it a bit because we are also waiting for a clarification from the government. And as I was saying earlier, we'll look at the literal interpretation of the wages. Special allowance definitely will form part of wages. The variable bonus, I have my doubts around it. It might so happen that the government, in all likelihood, might exclude this particular component from the definition of wages. But when they are excluding it, the important point is another, whether it will be forming part of that 50% bracket or not. That is another thing that we will have to wait and see.
And 50% bracket is important for the social
Exclusion.
security contributions and your gratuity computations, right?
Absolutely, because that 50% is what is a ring fencing approach by them, wherein they say, okay, fine, you provide those exclusions, but again, those exclusions cannot exceed 50% of the total remuneration.
And how to compute total remuneration? Would variable pay be, say, now Anurag, we say that variable pay is not computable at the beginning of the year, but can it be done, say for example, for the last year, say for example, for 21-22, the variable pay will be paid in this year, say for example, April, May or June, and then you know that component itself at least. So can that component be considered by the government to be included in the in this particular?
I don't think so. Honestly, I think it would be very, very difficult for the organization to do that sort of number crunching, because you'll have to understand it from the payroll side as well. Because for organizations which are processing the payroll, be it internally or be it outsourced, it would be very difficult to insert that kind of a logic. First and foremost, when we talk about all remuneration, my take is variable bonus per se should not be included, because it might lead to a host of complication. Because when we talk about 50% of the total remuneration, my total remuneration, if it includes the variable bonus, but I don't know my variable bonus at the start of the year. So shall I rely on my past sort of like bonus? Now, let's suppose an organization performance isn't well. They're going through a trouble times. They don't declare any sort of like bonus at all. Then I would have over contributed towards PF. And in PF, as we all know, if there is an over contribution by both the employer and employee, you're not allowed to get the refund of that amount. The only thing you can allow to do is either take an advance if you are eligible for those different aspects, or once you retire or resign from the organization, then only you will be entitled to withdraw that amount. So again, I think government's intention is not to basically make all these employees over contribute towards the retirement, but whatever is the threshold which is prescribed, they should be contributing to those aspects.
Got it. It's going to be interesting. There's one more
Yeah.
query around variable pay, if you can just take it.
What if there is a
There
capped variable bonus for the year based on annual compensation? See, if there is a capped variable bonus, and we would have seen this in different PF rulings as well. If we look at the past Provident Fund ruling, they used to say that variable bonus means it is variable by nature. If you are making a bonus a part of your employment contract, then it is nothing but a wages. So there are a good number of high court rulings in different states which have said that bonus, if it is something which is concrete, if it is something that you're mentioning in your appointment letter, then you can't later on say that, okay, fine, because it is bonus, I'm excluding it. Then it is nothing but a wages only.
I think the question is different, Anurag. The question is about the capping. So the amount is variable, but it would be capped at a certain percentage, say for example, but it can be below it. So then again, it remains variable.
Again, the question
it remains unknown.
Yeah. Then again, it is unknown only.
Absolutely.
What I was talking about was, I have seen in many organizations, they might say you will be entitled to a fixed bonus.
Absolutely.
Which is irrespective.
We have
Which is irrespective of your performance or the performance of the company. So
Correct.
in that case, what I'm saying is, then it will be construed as wages only.
Yeah, then you're just nomenclature
Is
is bonus, and you're just withholding that particular amount to be paid at the year end, but it is known to everybody.
Right.
Agreed. Totally agree. Wonderful session, Anurag. I think the participants have enjoyed it, and it is enriching for all of us to know these nuances. Means I was not aware of so much of interesting things would be coming in for all of us to guide our clients, and also to first learn ourselves that what is the change going to be. So thanks a lot, Anurag. Thanks for this wonderful presentation. If you have thanks to all the participants for taking out time and joining in. If you have any further queries, please feel free to contact me on Anurag. We are available to you at any point of time. Thanks a lot. We are signing off. Goodbye.
Thanks, everyone. Have a nice day. Bye.